Good morning, everyone, and welcome to the European Crossover webinar. And today is the Jackson Hole speech. So obviously, what we've been gearing towards as we moved into the throughout the week, and obviously the reason why indices have been so strong, dollars remained under pressure. So we finally reached that point. Now you can see here some of these moves that have just been just astronomical. I mean, look at here, Facebook, jumping up in here on these some of these all-time highs. Netflix, which was under duress for a while, is turn around after breaking the trend lines, turn around and regain that trend line. You can see Tesla here, well over $2,100. Amazon, new all-time highs. Look at Microsoft, new all-time highs. Apple pretty close to its all-time high, new all-time highs. Google, Nvidia up in here. So as we mentioned, most everyone expects um, Powell to be, somewhat dovish. There really isn't any reason to think that he wouldn't. He's always been dovish, always been very accommodative. So hence why we've seen these big pushes. I mean, some of these pushes are way overboard, to be quite honest with you. I mean, it's one thing to be expecting that. It's a whole nother thing to take it to a whole new ball game in which, I don't think anyone would doubt it. When you look at these are some of the key stocks here, whether you're looking in the NASDAQ or you're looking in the S&P. We know Apple's the number one biggest stock, wields 6% of the S&P. Same thing here. Look at Microsoft way up in here, Amazon, all three. I mean, just look at, and Facebook, look at that, and then Google. So you can see the kind of move that we had. And then we can go and take a look at where we are with the equity market. And you can see here with the NQs, same thing here, all-time highs. S&Ps, all-time highs. I guess what a lot of people are thinking, or the concern may be, is that whether it's a buy the rumor, sell the fact. I think you have to go and let itself play out. I think when you look at the market, I think some people will think that what if it's a buy the rumor, sell the fact. I think we've come so far. I'm not so sure. I think we'll see some volatility, and you've seen that in the VIX, which has popped up a bit here, and certainly we'd go on and suggest that or at least they are expecting to see some decent amount of volatility. I think you have to see how this market plays itself out. The moves have been so high that we can quickly dip back. I mean, if you look at the S&Ps, we're at 34.74. Look, I mean, you could easily just drop right here. That's almost 50 handles right here. And that'd be like literally nothing. That could just be just a quick intraday move. I mean, that's one of the things you have to go and take into consideration. We've moved so high that even these pullbacks, you can see some pretty good moves, and it would take a pretty phenomenal move just to go on and turn things in a momentum side to turn it even bearish. That's how far we've come. But I think you have to look at it in different scenarios of how it can go on and play out. We can maybe see the market push higher as most expected, stall, and maybe give in a little bit and then try and hold that and maybe give it a little bit more. But I don't think you would actually know we saw a true direction change, as I was suggesting in the chat yesterday, until probably Tuesday if we did see, because you'll probably maybe see a little bit of a pullback. But once again, these markets are moving on momentum, and that momentum isn't going to turn around and shift all by itself. Just because you see even 1 day or 2 days of a pullback doesn't mean the momentum has changed. That's just, if you're looking at those that are picking it up on exponential moving averages, pulling back, that just come back to an area where they would buy it and then try and push it back again. So it's just like a big ocean liner. It'll take a long time to try and move this thing. So we'll see how it plays out. But once again, like I said, you can quickly, we're looking on a 1 minute chart. And you can see here, Let's just set it in that 1 minute chart down here, from here to here, probably looking over the course of what, 15 minutes or so. It shed 20 handles. I mean, that's a pretty decent move. I was going to say way back. Right now, that's basically nothing. But you see what I'm saying is 20 handles isn't nothing. I mean, you can look here. As we went into the close, you just about nipped 12,000 here. And looking a little bit later on into the Asian session, probably about almost halfway into the Asian session, we had already come down to what, like about 935 or so. Shoot, that's 65 handles. So I think you have to take some of these moves into context, but I think you have to look into it, not be so quick to fade it. I think you have to let the market, and what I've done is try to look at the individual equities and look for moves there, because I don't think you can go with just levels here. We've looked at that, you're looking at different Fibonacci extensions, but the market doesn't even react very much to those. It's just reacting to what we're seeing here in these equity moves, and it's from there that we'll look at, and that will decide, if the market's run into a little bit of trouble. We saw it pull back a little bit yesterday on some momentum in the individual equities that really, cued the move into the indices themselves. So with that being said, let's see what's on the calendar here. Well, the key thing is going to be the speech, but we do have GDP here in the States at 8:30 Eastern. Obviously, jobless claims and pending homes index. Obviously, anything associated with home sales has just been taken off like a real bandit. Until then, we're probably not going to see very much movement overall. Australia, New Zealand dollars hold gains, and domestic data not so dire. The Australian New Zealand dollars held on to the recent gains on Thursday's domestic economic data proved to be not as dire as fast feared, and investors wagered U.S. monetary policy was about to take an even more dovish shift. Speculations Federal Reserve Chair Jerome Powell will use a speech later Thursday to signal the central bank will soften its inflation target to allow policy to stay super easy for longer, a potential drag on the U.S. dollar. The Aussie inched up to 72.38, having risen for 3 days in a row and away from a support in the 71.36 area. Major resistance lies on the August peak of 72.75, and a break could spark a burst of buying from momentum funds. The Kiwi was firm at 66.26, but faces resistance at 66.55. Australian data showed business investment dropped 5.9% in the second quarter as coronavirus lockdown hit demand, though that was a lot better than the forecast of 8.4% fall. Firms did scale future spending plans, but again, not nearly as much as expected, thanks as part of the mining sector, which is benefiting from strong Chinese demand. The upshot is that the outlook for capital spending isn't as gloomy as one would expect in the current environment. He now estimated that gross domestic product, he estimated gross domestic policy or product likely fell by around 4.5% in the June quarter from the previous quarter, up from a previous forecast of 6.5%. The GDP data is due next week. Investor confidence in Australian assets were underlined by the details of the government's 21 Aussie billion sale on Wednesday, which drew 66 billion in bids. Some 46% of the offer went to foreign investors, mostly in Asia, except Japan, the US, and UK. Fund managers bought almost about 31% of the issue. Dollar sags as investors brace for a dovish Fed signal. The dollar wallowed near its lowest level for the week on Thursday as investors look for hints from Federal Reserve Chairman Jerome Powell that the central bank might tweak its policy framework to help push up inflation. Powell is scheduled to address the Fed's annual central bankers conference later in the day, usually held in Jackson Hole, Wyoming, but being conducted virtually this year because of the pandemic. Investors are betting the U.S. Central Bank will introduce a new policy framework to fight personally low inflation as early as next month. If the Fed turns out to be less dovish than many have been thinking, we could see a rally in the dollar, said Kiyosuke Suzuki. The dollar's index against six major currencies stood at 92.89, near the weakest level so far this week, and not far off its two-year low of 92.12. Since the start of the year, the Federal Reserve has expanded its balance sheet by as much as $3 trillion. The euro changed hands at 1833, near its highest level so far the week, though few players expect a clear break from its range so far this week ahead of Powell's speech. The dollar slipped to 597 on the yen, losing steam after hitting a one-week high of 658. A more aggressive Fed policy tends to weaken the dollar, and the broadcasting of this policy change has already been a factor in the recent mild yen strength, said John Vale. Another key focus for the yen is Prime Minister Shinzo Abe's news conference scheduled for Friday, rising speculation over his health. The British pound stood firm at 32.11, having gained 9/10 from the start of the week. And we'll end it right there. And let's go move into the analysis. So the euro rebounded on Wednesday ahead of Powell's speech to close above 18 even. Resistance will be 1910 with support at 1714. So you can see here we have a wide range because once again, if the Fed does go on and or Powell is rather dovish, that will give the euro an opportunity to move higher. Obviously, the dollar move lower, and that resistance would come in at 1910. And if we do go and sell off, then we're likely to go and make a trip down here to 1714. That doesn't mean that that's where it'll stop at 1910 or necessarily right at 1714, but that's where we do expect some demand or offering to go and take place in that area. Moving on to the cable. So cable added on to Tuesday's gains, closing above 32 even. Resistance on Thursday will be 32.69, with support at 30.52 on a sell-off. So we would expect this to go and pair back, come into this area, 30.52. So let's notate that. And look at this Aussie, up, up, and away. So the Aussie continued its upside move on Wednesday. Resistance going into the Powell speech will be 73.05, with support at 71.23. I think if you're trading FX, it's as far as the scenario, it's I won't say necessarily much easier, but it. I think you can come in with specific levels because of the way these markets are trading, as opposed with indices. I think you have to sit back and you saw some of the runs I just showed you, phenomenal runs with Netflix, which at the beginning of the morning was trading at 495 essentially, and closed at 547. I mean, we you can see we've gained 50 some dollars. I mean, in one session. So these are just like nutty moves. You know what I mean? Facebook, which actually had made a run from what looks like it actually gapped higher from the close at 280, gapped higher to 283, only to finish at 303. So some of these moves, I think, with equities, if you're trading the indices, you have to sit back and see how the market reacts, and don't be so quick to come in. Whereas I think with FX, you can come in, you can see you can where the market is and come in at defined levels, or look what the market is at these defined levels. I don't think that's necessarily the case if you look at equity indices. Let's go and move into the Kiwi. So the Kiwi saw a sharp rebound on Wednesday, closing above key resistance of 66.01. Resistance on Thursday will be 66.72, with support at 64.71 on the sell-off. We saw a pretty good solid move here on the Kiwi yesterday. You can see that. I mean, that was rather impressive considering how quiet other markets have been overall. So the dollar CAD posted a new closing low as the slide continues. Support will be 30.57 with resistance at 32.42. So if we do see the dollar turn around and reverse itself, that's what will be the key level. Obviously, to me, that what I'd be looking at, my focus is going to be on the indices, but the key drivers are going to be the euro, cable to a certain extent, although I mean it's had a phenomenal move. But the pairs that I'd be kind of focusing in on would be to hit or not to hit. Well, if I saw the dollar reverse trend, obviously it would impact all currencies, but I'll be looking closely at the euro, the Aussie, dollar peso. That's nothing. It's absolutely. I wouldn't even bother even looking at that thing. Not only because it's been so quiet, it doesn't mean anything to me in this environment. It'd be an afterthought. Like, oh, the market came under pressure. That's why the dollar paid. It's not going to be a driver like the euro would be, like the Aussie would be, to a certain extent, the cable. But my focus would be, I want to pay attention to the euro and to the Aussie. If I'm looking, let's say that indices are just high and they're just really not moving, and then all of a sudden I see the euro turn around and start to come under pressure, and the Aussie, then that's something that I would start to focus in on. Also, to a certain extent, the dollar yen, the peso, I wouldn't give it an afterthought in the overall scheme of things. It's just an afterthought in my eyes. It's basically meaningless in this type of an environment. It's just something that, oh, it's there because of after everything already played itself out. That being said, the dollar peso is completely stagnant. Support remains 21.72 with bias chart resistance on the rally at 22.14. And the point I'm trying to make is it's not a driver in this environment. So I'm not interested. I would not be interested in looking at it. It would eventually move however it's going to move, but it'd be an afterthought. It would be one that you'd be like, oh, that's a leading indicator. It would not. So 21.72 and resistance 22.14. Let's go into the dollar yen. Dollar yen would be noteworthy as to how it may respond in regards to U.S. yields, and that's certainly going to have an impact or be impacted with Powell's speech. Dollar yen posted a dark cloud cover on Wednesday. Support on Thursday will be 836. I meant to say 536. I don't know. That came up with resistance at 672. That's a bit of a jump above the 647, but the 647, that's where you would knock off the stops. But the impact area where it could go to would be 672, and the goose the stops. It's here where, okay, let's see, is there more above it, or we just run out of gas? I'm talking about the 672. Let's go and move on to the cash dollar index. So the dollar index posted a subsequent lower close on Wednesday. Support on Thursday will be 91.97. That's if we goose some stops. Right down here. 91.97 with resistance at 93.74. Once again, someone think that's quite a jump, but once again, you can goose some stops up in here around 93.50. Rubber will start to meet the road around 93.74. If we receive a rebound, and then we can see, like I said, doesn't mean that stops it. If we receive stocks under pressure, I really don't necessarily expect that. Can they start to sell off a little bit? Yes, but people are just going to be trying until proven wrong. They're just going to technicals, and it's just a momentum play. So they're just buying the pullbacks until eventually proven wrong, where that just doesn't work anymore. Then we'll see a shift, and then that shift at that point, if that were to come into being, then we could see an actual real pullback. Anyway, nonetheless, is will we really start to see some real interest if we did rally would be at the 93.74, and then whether it can make it up to 93.87, but the real interest would be, to me, 93.74. So on the downside, potentially 91.97. $93.74 on the upside. And let's go to the cross rates. Oh boy, we've really extended this move. But we already saw how the Kiwi had already done very well. Obviously, you can see here the resistance is going to be 70.59. On the upside, downside, right here. See touches coming across the board? That'd be your support, which would be 69.78. Let's go and move into the Euro Yen. Trading rather quiet after this gentle little bit of a pullback. Resistance is going to be right there, 25.90. And support pretty clear right there. That's where demand would come in. Obviously, we could grab a foothold and open the door for a lower price, but the initial support would come in right there, 24.70. Euro has already turned around and started moving lower. Obviously, this is more about the strength in the Aussie dollar. As I said before, the pairs that I'd be looking at, my focus would be more on the indices, but looking across, my eye will be clearly focused on Euro and Aussie. You can see here the Aussie has been stronger. Certainly why we're seeing the Euro odd pair back. Support coming in here. It's going to be right there, 62.52. Right there, 63.62 right now. We've broken support here, or we're below that. Below that, once again, with the strength we've seen in the antipodes, coming into some support right in here. You can see some decent volume trading in here. Let's push that a little bit lower right there. 77.72. Well, you can see this key area right here, the 70.80. We'll take a little bit closer look on a 2-hour chart. See right there? That would be 78.95. Onto the RCM. It's going to be 77.10. It's pretty clear. It's a huge weekly level too. Support, pretty clear right there. $76.47. And onto the guppy. Resistance. Let's see if they're able to play just above this area here. Or would they push to? A lot of volume trading in the right. Looking right in here. $40.54. And support, I'll take a look at our 2-hour chart. Right there, 39.71. At least initially. And let's finish up with the sterling odd. $81.84. And resistance right there. 82.77. And we'll now just take a quick look at the gold market. We talked about this yesterday. We've actually had a nice little move back up in here, and then we kind of, let's see here, rotated a little bit lower. The key thing is this will be one, once again, just like I mentioned, it's easier, I don't want to say necessarily, maybe easier is not the right way to look at it, but if you're looking here at equities, and we've been going to new highs almost on a daily basis now, how do you measure the technical levels? You see what I'm saying? If you step in and go, well, we've reached this new level, then that's got to be it. Whereas, once again, I think, like with gold here, first line of resistance here is 1986, but you'd be looking at this little zone here. Plus, once again, a lot of people thinking if we rally back up in here, then this is where you'd be looking at, this zone between 1986 to 1999. We'll maybe even goose stops above it, above 2007. The real resistance comes in 2016. But you'll probably see some people trying to step in and fade or looking to go in and take profits, I should say that. and then you can see how they'll react, how the market reacts in this level. And that's something that you can go on and work with. You have a zone here you look at, see, move into the shorter time frame, whether it be 30-minute or a little bit shorter than that, to see how it's reacting. Also looking at volume, it's a little bit more difficult when you're just moving to a new high every day to see how the market trades. And that's why I'll be looking at, my focus will be on the individual equities. But you can see here with gold, this may be where we rally up in here, and maybe they don't find any more takers, or not that many, as we clear 2000, if we do go and clear that, and we'll see how the market reacts beyond that. Obviously, the key is going to be on the dollar zone reaction and the reaction of interest rates. One last look, we'll take a look at crude oil. Nice little rebound. Crude oil may still maintain its bid. Obviously, with the hurricane that's come in to the Texas and Louisiana coast, there's concerns with some refiners, although that would have more of an impact for gasoline, the final product. But it may keep a bit of a steady bid to it. But there's also a different way to look at it, because then if you can't refine it, then you have more product and more crude available. If it can't be refined, you could end up seeing this slide. We had a pretty good run, so I think crude will kind of follow its tone from the overall markets. So this would possibly be susceptible for a pullback over the course of the next couple of days. Yeah, not that you couldn't see something today, but would be a little bit of a concern for bulls here. But with that, we'll call it a day, and we'll post the buy chart in the room, and we'll see you there. And thanks for joining us here on the European Crossover.